Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Welcome back to the Week in Review. This week we're looking at the signals that matter most to your wallet. From resale profits stabilising to a surge in borrowers locking in fixed rates, the market is shifting gears. We also have a major update on the foreign buyer ban, mixed signals from the labour market, and a look at why solar power is booming but leaving some Kiwis behind. So let's get into it. Our topics for this week: topic number 1 from the New Zealand Herald on the 12th of February, property owners cashing in on resale turnaround. Topic number 2 from Good Returns on the 11th of Feb, big move back to 2-year fixed interest rates. Topic number 3 from One Roof on the 7th of Feb, explainer, foreigners will be able to buy New Zealand homes from March 6. What happens next? Topic number 4 from New Zealand Advisor on the 9th of February, soft jobs, cooler wages by RBNZ more time on rates. Topic number 5 from RNZ on the 10th of February, households jumping on solar power, but what if you don't have a home loan? First up this week in review from the New Zealand Herald on the 12th of February, property owners cashing in on resale turnaround. Cotality New Zealand's latest pain and gain report indicates that the decline in resale profits has arrested, with an 88.1% of residential properties selling for more than their purchase price in the December quarter. It's a slight tick up from the previous quarter. The national median resale gain sat at $298,000. While this is down from the late 2021 peak of $440,000, it remains historically high. Cotality Chief Property Economist Kelvin Davidson suggests that the market has entered a trough, describing the recent trend as a gradual downwards drift rather than a slump, with conditions now broadly holding steady. So key trends: standalone houses continue to outperform apartments, which remain more susceptible to resale losses. Property owners are holding on to assets for a median of 10.1 years, the longest period on record. Davidson attributes this to owners waiting out the softer market to maximise capital growth. Davidson expects lower mortgage rates to support demand, but cautions that the market is entering a period of stability rather than a sharp rebound. Topic number 2 from Good Returns on the 11th of February, big move back to 2-year fixed interest rates. According to RBNZ data reported by Good Returns, December saw a significant shift in borrower behaviour, with 2-year fixed interest rates surging back into popularity among new mortgage holders. After months of favouring floating rates in anticipation of further official cash rate cuts, owner-occupiers pivoted strongly towards stability. The share of new lending on 2-year fixed terms jumped to 23.2% in December, up from just 10.6% in November. The primary driver for this switch was a change in market signals regarding the OCR. While the Reserve Bank cut the rate to 2.25%, indications that the easing cycle had likely bottomed out caused wholesale rates and subsequently mortgage rates to rise. This prompted borrowers to lock in rates rather than gamble on further drops. Additionally, aggressive competition played a role. Major banks offered 1.5% cashback, sparking a huge flurry of activity as borrowers switched lenders to secure better deals. This resulted in a record-breaking month for new lending, which totaled $13.1 billion in December, surpassing the previous pandemic-era high of $9.2 billion set in July 2021. Investors followed a similar trend, with new investor lending rising to $3.6 billion. Floating rate usage among investors dropped sharply, down 30.2%, while 2-year fixed terms increased to a 20.5% share. Topic number 3 from One Roof on the 7th of February, an explainer, foreigners will be able to buy New Zealand homes from March 6. What happens next? From March 6, the government's amendments to the Overseas Investment Act will come into effect, granting Active Investor Plus, or AIP, visa holders the right to purchase residential property in New Zealand. While this is not a full reversal of the 2018 foreign buyer ban, it opens a specific door for wealthy investors. Holders of the so-called golden visa will be permitted to buy or build one residential property valued at $5 million or more. Who's applying? Since the visa became available in April, over 1,500 foreigners have applied, with the majority hailing from the US and China. To qualify, investors must not only meet strict character and health requirements, but also demonstrate they have at least $5 million in liquid funds ready to transfer within 6 months. Key conditions for purchasing. Investors are restricted to owning just one residential property under these rules. If they wish to move, they must sell their existing home first. Visa holders must spend at least 21 days in New Zealand over a 3-year period for $5 million investors. Restrictions remain for sensitive land, such as properties exceeding 5 hectares, or those adjoining the foreshore or on islands like Waiheke, which require additional approval. Once the visa is secured, the Overseas Investment Office, the OIO, generally aims to decide on property consent applications within 5 working days. Treasury analysis predicts the impact on house prices will be minimal, as less than 1% of New Zealand's housing stock meets the $5 million threshold. Any price uplift is expected to be geographically concentrated in luxury pockets like Remuera in Auckland and the Queenstown Lakes district. If you'd like to learn more about investing in property or the New Zealand property market, join me at one of our free events called How to Succeed with Property Investing. These events are where we focus entirely on helping you to learn more about property investment to reduce the risk of making a mistake. As a financial advisor and an experienced investor, I'll show you how to navigate the current market with confidence and make the right decision. We're live, online, and independent. We don't sell property. So go to propertyapprentice.co.nz to secure your free spot. If you've already joined one of our free events and are ready to join our lifetime coaching program, you can also book a no-obligation meeting with my husband, Paul Roberts, via the website if you've got any further questions before you fill out your application form. Topic number 4 from New Zealand Advisor on the 9th of February, soft jobs, cooler wages, buy the Reserve Bank of New Zealand more time on rates. New Zealand's latest labour market figures are sending mixed but broadly reassuring signals. While the unemployment rate ticked up to 5.4%, economists note that this is largely due to a rise in workplace participation, more people looking for work rather than a collapse in demand. In fact, the economy added 15,000 jobs to end of 2025. Crucially for interest rate expectations, wage inflation is easing. Private sector labour cost growth has slowed to 2% annually, and it's a 4-year low. This suggests that there is still slack in the market, which reduces the immediate pressure on the Reserve Bank to hike rates to fight inflation. Westpac forecasts that the Reserve Bank will remain on hold, with the first official cash rate hike not expected till December 2026. Kiwibank agrees there's no rush for the RBNZ to move, noting significant spare capacity in the Kiwi economy. ASB warns that while domestic inflation's cooling, aggressive rate hikes by the Reserve Bank of Australia, the RBA, are pushing up wholesale funding costs, which is flowing through to New Zealand fixed mortgage rates. The consensus is higher for longer. While the labour market is stabilising with green shoots of recovery, wholesale pressures from Australia mean cheaper money isn't on the horizon just yet. Advisors are being urged to stress test clients at slightly higher rates. Topic number 5 from RNZ on the 10th of February, households jumping on solar power, but what if you don't have a home loan? Thousands of New Zealand homeowners are leveraging bank lending to install solar power systems, but advocates warn that those without mortgages are being left out of the energy transition. Major banks have seen significant uptake in low to no interest sustainability loans. ANZ alone has lent over $850 million to 21,000 households, while ASB reports $327 million in their Better Homes top-ups. Mike Casey, CEO of Rewiring Aotearoa, notes that a typical system costs between $9,000 and $15,000, with a payback period of roughly 7 to 9 years. He argues that while taking on debt can be uncomfortable, continuing to pay energy landlords indefinitely is a form of debt in itself. Currently, New Zealand lags significantly behind Australia, with only 3 to 4% rooftop solar coverage compared to Australia's 40%. A major barrier is that low-interest bank loans generally require an existing mortgage. This excludes retirees, who often own homes outright but lack the income to service a standard commercial loan, and lower-income earners who may not qualify for bank lending. The solution? Rewiring Aotearoa is working with councils and the EECA to develop a ratepayer assistance scheme. This would provide long-term, low-interest loans tied to the property via rates rather than to the individual, allowing a broader range of Kiwis to lower their cost of living through energy sovereignty. Trials are also underway to find workable models for splitting solar benefits between landlords and tenants. While we're seeing a market that's finding its footing, resale profits are stabilising, borrowers are locking in certainty with fixed rates, and while unemployment has ticked up, the underlying job growth suggests resilience. But navigating this stabilisation phase requires a different strategy than booming times. Whether you're looking to buy your first home, expand your portfolio, or just figure out how to structure your mortgage in a higher for longer environment, you need a plan based on data, not on headlines. So join me at one of our free online classes called How to Succeed with Property Investing. These events are all held live and held online, so you can ask questions and gain valuable insights and strategies tailored to today's market conditions, regardless of where you live. Whether you're an experienced investor or just getting started, this free session will equip you with the key tools and insights to make confident, informed decisions. Don't miss out. Register today and take the next step towards achieving your financial success. At the end of our free events, I'll tell you more about how we could help you, if you were a client of ours, to achieve your investing goals. So if you're interested in finding out more about how we can help you, go to propertyapprentice.co.nz and register today. If you've already been to one of our free events and you'd like to know more about how we can help you on your journey as a client, book a no-obligation phone call or meeting with my husband, Paul Roberts, through our website. That's propertyapprentice.co.nz. Thanks for listening. Hey there, want to stay on top of the latest property news and trends? Subscribe to the Property Apprentice podcast for weekly updates that will help you to navigate the market like a pro. We cover everything from insider tips to expert interviews, so you'll always be in the know. And don't forget to ring the bell and hit that subscribe button here on our YouTube channel for even more helpful content to boost your property journey. Check out the link in the description to subscribe to the podcast, and we'll see you in the next episode. Happy investing.